Hello, everyone, and welcome to the journey to multifamily millions. I'm your host, founder, and CEO of Zana Investments, Tim Little. And on today's show, we have with us Bryan Escudero. Bryan is the president and CEO of First Gen Foundations, a company dedicated to educating first-generation investors like himself on real estate as an investment vehicle that can lead to generational wealth. Bringing 2 decades of project management experience, he and his partner have grown their portfolio from 0 to 55 doors and from $0 to over $8.5 million in assets under management, all in under a year. Bryan, welcome to the show.
Thanks for having me, Tim. Hope all is well.
Hey, so I gave everyone a high-level overview of your background, but on this show, we really like to get into the details of how you got started on your journey to multifamily investing. So why don't you go into that for us for a little bit?
I actually took the long way to graduate college, right? Through work and through family. I graduated when I was 42. And when I got back, I graduated in December. When I got back home, I had a bout of COVID, came back out, and I was like, all right, Lord, what's next? Is it real estate or a master's degree? And real estate was always in the back of my head. And there were two differences. One was real estate would cost me about $50,000, and 6 months I can figure out if that's anything I could really do. And a master's degree would cost me about $50,000 and about 3 years. And I decided to dive into real estate. I'm one of these obsessive people. Started reading a ton of books, listening to a lot of podcasts like this, and just trying to understand what real estate was about. And as I started doing it, I realized there was this fear inside of me because I had never done something like this. Like you mentioned, I've been in TV for a long time, managed large teams, large projects. That's a very swift environment. And real estate was just something I never really dedicated to. But one of the podcasts, there was a guy who spoke about the thing that he did to get started in real estate. And he said it was wash his truck. And I thought that was strange. And he gives a story about he didn't know anything, but he knew he needed money. And he had this truck that he didn't really need. He didn't have money for a down payment on his first property. So he washed his truck because he needed to wash it to sell it. And so for me, that became read a book, right? Because I was stuck in this fear. And I believe education is a good fighter of fear. And so I took that deep dive. The more I did it, the more I realized, wow, this is like a thing. People that are not necessarily inherently very smart or very dedicated or very anything can do this thing and have created a lot of wealth for themselves. And the reason I got into it was, how can I create a passive investment if something were to happen to me? I'm the sole breadwinner in the home. And so that was the first driver, right? It was, how can I provide for my family? Then it became, for those that come after me, what kind of inheritance can I leave for them? And then as I started doing it and just researching even more, I realized people like me, nobody's reaching out to us and talking to us about this thing, about the realities of generational wealth creation. And I come from a family of immigrants. My parents were just trying to keep food on the table and keeping us out of trouble. And they did a great job. My siblings, they're all successful in what they do. And we wanted to be an avenue for that. So we started the company to help others. We bought our first duplex in May. We brought the second one, I think, a week or two later. And then we're off to the races. My partner, who also happens to be my brother, was in parallel with me. He had bought a couple of properties. And we realized we're both of the same mindset of helping. And how we're going to do that was through education. And that's where First Gen Foundations came. It's genuinely to help. We both have good jobs. We both like our jobs. We don't necessarily have an intention of leaving them, but that might happen one day. But the reality is, it's how do we help people? And so First Gen Foundation came from that love. We were brought up to serve people and to help. And we weren't raised to really understand those nuances. And real estate just really seems like a really good avenue for it.
Yeah, and I think there's a lot in what you just said that is going to resonate with a lot of our listeners. A few of those things being that the fear of unknown, right? A lot of people who are probably listening to this podcast right now have done some research. They've read a couple of books, they've listened to some podcasts, but they haven't actually taken the next step. And the reason for that is probably fear, right? The fear of that risk. And of course, any investment has risk, but there's also reward there. So I think to that, I would say that, as you talked about, education does build confidence over time, though. Once you start to understand these assets and not just understand the upsides, but understand the potential downsides, then you learn how you can mitigate those downsides. Then you really start to get that confidence and you get to a point where you're either going to take action or you're not. but you have to have that heart to heart with yourself at a certain point and say, am I going to do this or not? Because I've already gone to these conventions, paid money for these books. Maybe someone's even paid money for mentoring or coaching, but until they take that next step, it's all for naught. So I think that's why education is still a really important part of that. But at a certain point, you need to take that action. And it sounds like that's what you did starting with that first duplex.
Yeah, it's funny as I've been writing, right, or try to hit the heart of that. And we come up with this term of the first next step, right? Because everyone can take the first step, but it's like, all right, we just got to do it again. We do it again. We do it again. And the fear of taking that first one will lock you in. And we help people just take it again. And you do that 10 times and you're 10 steps down the road. And it's been very interesting to hear people, and some of them in tears of just the sheer fear of it. And people can be afraid of not enough money, being a landlord, finding the perfect deal, the lack of experience, and all of that is just the fear of failure. And what we like to tell them is there's a reality of it. Life is not fair. And we can either let ourselves be pushed back into a corner by that or really just lean into it. And so we talk to people about not walking around the fear, it's walking in the fear because it stays there. And Tim, you've been doing this for a little while. And when you're cutting that check, you're still a little scared. And you talk to the people that have been doing this and been very successful. There's always fear. But again, what can we do to mitigate that? I think that a lot of people are afraid to reach out to someone and have them walk through them in it. And one of the things that I've noticed in this community, which has been a pleasant surprise, is just everyone is, or not everyone, but the overwhelming majority of people are willing to help. Tim, we've had conversations offline. You're always willing to give advice. And there's just any number of people that we want to see people succeed. And so that's been very comforting to me. And that's what we're trying to build, right? It's just this community of first gen investors that they can lean on each other. We can lean on each other and walk forward, walk in the. So that's part of it. It's taking that next first step. And you do that enough times and you have a duplex or two or four or 55 doors.
Yeah. And I think there's a stark line too between the fear of writing that check for your own first investment property. That's where I was back in, I think it was like 2014 that I bought my first duplex. And writing a check at that time for $25,000 or whatever it was for the down payment, that was a big deal for me. And I was scared. But then once you come onto the syndication side of things, for example, and then you're talking about putting other people's money into a deal, that is a whole different type of fear. And because then it's not just you, right?
Yep.
You're not just responsible for yourself. You are a steward of other people's money. And that is a huge responsibility that I hope understands both the passive investor and especially the syndicator themselves. Because, yeah, if you don't have that appreciation for that level of trust that people are putting into you, then you're going to make mistakes and you're not going to last long. That's my perspective, anyways.
Yeah, I agree. We talk about it in our investment thesis online is we're not slumlords, right? We take care of the properties, we take care of the tenants, we take care of the managers, and they take care of the profits, right? And the idea is we didn't grow up poor by any stretch. We didn't have a ton of money, but we didn't grow up poor. But we know like home was our home, right? And we took care of it. And even when I left my house and I had my first little apartment with my wife where I was renting, we took care of it. And the idea was we were hardworking people, continue to be hardworking people, and we want to take care of the properties. And most people will do that. If they see a genuineness in the landlord, a genuineness in the management company, it's important for us to create this sense of community. Look, anyone that's listening to this is pretty clear on the lack of housing in this country. And what landlords might get a bad rap, but the reality is the real estate investor is doing a service for the community. Because if we're taking care of these properties, we're giving people a place to stay. And those people that truly want to help, I think there's a need for more people of high moral quality in these positions to help. Now, you don't need to go crazy with rent increases, right? And you've had where one of your units is open. Man, you would much rather not raise your rent and keep it rented than say, I'm going to bring it up 25, 30%, and then it's empty for a few months. And so that hand in hand, that has to happen between the investor and the tenant and the property manager, like all of that stuff, that ecosystem is very delicate. And so again, our goal is to help educate people and say, hey, we can be part of the solution because a lot of these people are coming from the bottom up, but they weren't raised with a ton of money and they might have some now, but that's not what they came from. And surely we have investors that they come from wealth, and that's great. And they like working with us because we're genuine. We're truly trying to help people. But you create that ecosystem enough times and you're able to make a change in the community. And that's important to us. That's part of our founding principles, is to help people.
Yeah, and I hear you saying that a lot. And I think that's the other thing that people will resonate with is that education piece. Because, like you said, most of us, yourself, myself, we didn't grow up knowing what multifamily syndications were. It's not, that wasn't dinner table talk.
Yeah.
And like my dad didn't have any stocks, he didn't have any investment property. He wasn't able to, again, educate me on that. So, like you, I see that as a responsibility. It's not like there's some cabal out there trying to keep this a secret. It's just you don't know about it until you get introduced to it. So I think that's why your mission is so valuable, especially from those folks who may not see the resources necessarily. But a lot of them are just like most people. They have a decent job and they go about their way. They think about saving for retirement through maybe their 401k, but they rarely get outside of that bubble. Is that
Yeah.
what you're seeing in a lot of your investors?
Absolutely. Again, the stock market has been putrid for the last few years. It's fine. It is what it is, right? Everything's cyclical. And my parents, they did such an amazing job raising us. We had an amazing childhood and they built the first foundation, right? They allow us to take that next step forward. And I never want to knock that. And the reality is, it is unjust and sinful for us to not push forward for the next generation. And we have the capacity to learn these things, and we have an obligation to share these things. And when I talk to people, they know about the stock market, and that is a huge step. Like, just putting money into any type of investment is huge. And that's the mindset shift that some people need. And a lot of our conversations is just a mindset conversation. The numbers are there, right? S&P is going to give you 8 to 10% over time. It's there. Those numbers are not something that you can fudge. You can look at it historically. Real estate, it's created 90% of the millionaires in this country. Those numbers are there. That's not the conversation. The conversation is, what does that mean to you? And how do we help you turn from a consumer to an investor? I write on your home being your biggest liability. And that's a shocking thought, because we were taught, get your home, pay it off, and you'll be okay. But the reality is, Social Security is being taxed right now. I don't know if it'll be there when I get there, but I can't bank on that. And so we're just trying to help people open those blinders a little bit and see this very studyable, I just made up a word, but it's something that we can understand, right? The stock market, I don't have time to study the stock market the way I can real estate. It moves too fast. There are too many options for me. Why? Because I have a W-2 job that I enjoy. I do my job as best as possible. I believe I do a decent job. I've been where I am for a long time, and they've entrusted me with a lot of resources. And what does that do? That helps me kind of transition that into what I'm doing in real estate. But a lot of people, they're just stuck in that 401k and they want something else. They want an alternative investment. And a lot of people just throw their money at the latest fad coin or whatever cryptocurrency is out there. People are looking for a solution. And we talk a lot about in this business about niching down. And we're niching down and we're saying that multifamily is the way to go. We do have some single families and they're great. We birth them. We're in the process of flipping one now. There are options in real estate. But the idea is, what's going to give us the most bang for our buck? And when I say us, first gen investors, I'm not talking about myself personally. And it's, how do we help people get past that fear for them to walk in?
Yeah, I agree. Because too many people only have a plan A. In my point, like you talked about earlier, being the sole breadwinner in your house, God forbid something happens, people need to have that plan B, C, D, whatever it is. All right.
Yep.
We talked a lot about that mindset piece. Let's move on to the properties. So I know your portfolio includes some smaller properties, and you talked about getting a few of those properties in pretty quick succession. Can you talk to me about how you were able to do that? Did you have to do 25% down because it was investment property? And if so, where'd you come up with the capital for that? Just talk to me about some of those earlier, smaller deals and what that looked like.
Yeah. Before I bought anything, again, spend a lot of time educating myself. I don't like to say educating myself, getting an education, right? Because a lot of people were educating me through books and through podcasts and through interviews and questions and answers. But I did a business plan before I did anything. And in my business plan was, we were going to help people get into real estate. And I was super pumped. We knew that we weren't going to buy something in Miami where I live because it's just too expensive. It didn't make sense, right? I wasn't going to hit a 1% rule. I wasn't going to get a good cash return. I went to Middle Tennessee and I was ready to close, super excited. And my wife stopped me cold and she says, "Who are we helping?" And I'm like, "Well, we're helping ourselves." And she says, "You said that if we did this, we were going to help someone. Who are we helping?" And I went into a 3-hour conversation on a Saturday morning that I wasn't expecting, but it set the tone. And so this was just a good, safe deal. We had money that we were going to put down, but we said, okay, let's offer it out to an investor to come in with us. And so we got some money. Again, one thing that people get into this business don't understand is that you're always building your track record. You're always building your reputation. And thankfully, in the way we live our lives, we have a good reputation with the people around us. And there's a need for people to put their money to work for them, and they just don't know how. So the money's out there, right? It's just locked in, and people have it in stocks that they wish they didn't have them. Some of them have it in bank accounts, or some of them have it under their mattresses. And we know of a family that wanted to get into real estate, and we reached out and they were super excited, and it was very humbling. Going back to your point, it makes me scared, not scared, but I am much more cautious with other people's money than my own. And I'm very cautious with my own money. And we bought that first one. And then oddly enough, I'm looking at the closing documents. And when I see the comps for that duplex that we bought, there was another one that I saw was for sale and the rental comps were great. So I was like, that's available. We went and bought that one. And a few months later, we bought another couple. And again, like I said, my brother was doing his thing separately. And so we saw that we were just in parallel on a lot of this stuff. And so we merged together. And then we were pretty quickly at about 1.5 million assets under management. And our goal was, okay, let's get to 2 million by the end of the year. And then we started looking at syndications, and we stepped up and we closed on a 40 unit in Tampa as co-GPs and brought in a batch of investors. And it's been great. Really, when you lose the fear, when you shake off the fear, when you're able to make decisions with imperfect information, you'll be really surprised at what you can do. And that's one of our competitive advantages, right? I work in the broadcast industry and it's very fast paced and there's a lot of decisions that need to be made. And that's helped me out in real estate. And my brother he's an engineer by trade. So as analytical as I am, he's about 8 levels deeper. And there's like this stressor, right? So when we joined together, he was like, "I'm scared I'm going to slow you down." And I said, "I need someone to slow me down and you need someone to speed you up." And so we just pull on those levers. And so it's a good partnership. And again, you deal with first gen investors. Family is important to them. We're a family business. And it is very encouraging to just know that we have the same heartbeat. Everyone that works for us has the same heartbeat. And that's because of that first conversation, right? You asked how we got started. It was stop in your tracks. We're going to have a 3-hour conversation on how we're helping people. And those are the little birth steps of First Gen Foundation.
Yeah, that's awesome. And I love how you talked about your partnership with your brother, where you both had fears about the other one, but that's what gives that partnership strength, right? Is those complementary characteristics that you guys have where one steps on the brake if the other's going too fast and vice versa.
Yeah. It's a good partnership. It really.
Yeah. And so I love that you also did a business plan before you did anything else, because I think that's something that a lot of investors just starting out, I'd say probably myself included, skip in the beginning, right? It's all right, I just want to get out there and get a deal done. And so
Yeah.
they run out there and do it without necessarily a long-term vision or their acquisition requirements or any of that laid out. And that stuff develops over time, which is fine. But I think if you start out with that vision ahead of time, just like any plan, you're in your project management, you know how this stuff works. So I think you definitely put that to work as an advantage for yourself because it helps to clarify your direction as you move forward.
Yeah. And, I'll say this. School helped me in that. I often struggle with the value of a university education. Nowadays, I didn't get into student debt. That's one of the benefits of taking the long path, right? I had a job that helped cover the costs and I did it at a pace that was manageable as I was building my career, right? I'm an executive in the company I work for. And as I was building my career and going to school and starting and stopping, you just learn a lot, right? You learn a lot in life, in the business world. And then I remember taking an entrepreneurship class at some point. and just understanding the benefit of the business plan. And then just in my corporate life, understanding the benefit of stopping, right? Just stop. And I have this saying in life is you make better decisions when you mosey, right? And the idea there is you're consistently building a foundation for the next thing. And as I was getting ready to jump into this, I had already read, I don't know, 20 real estate books. So I had the theory down, but it was like, okay, we're going to put this into action. And it was just one of those like, all right, and mosey, think about the thing. And we're just consistently trying to set the expectation, understand the risks. And that's something that I think is very beneficial when you're getting started in anything, right? Understanding the commitment. This is going to take up time. And it was a conversation with my wife, with the family. Hey, guys, we're doing this thing and it's going to take time away, but this is why we're doing it. And yeah, I'm happy I did that. And it took time. It took time to do it, but I'm happy I did it.
Yeah, and I will tell you, those conversations are still happening in my house on occasion about that having to take time out in order for the long-term goal, right? There's
Yeah.
going to be sacrifice up front, but you have to be able to communicate why it's going to be worth it and why you're doing it. So those earlier deals, it sounds like in terms of structure, those were probably JV deals, joint
Yeah.
ventures. Is that right? And
Yeah.
then
Yeah. They're JVs.
okay, and so when you moved on to that Tampa deal, I think that's where most listeners are like, okay, but how did you do that?
Yeah.
They just don't understand that step from going to, because a lot of them probably have a single family home or a duplex or maybe even a couple, but they don't really know how to make that jump from there to syndication. So can you talk to us a little bit about what that looks like, how you made that jump from those small multifamilies to the commercial multifamilies doing a syndication?
Yeah, so we had an intermediate step where we went into a commercial property as a JV. And it was a 6 unit in downtown Columbus, a really solid property. It's doing well for us. We're actually turning it faster than we thought we were, which has been good. Again, the shaking off, first is shaking off the fear, right? It's saying, it's understand, hey, it doesn't take the multiples amount of work from a duplex. It doesn't take 20 times this work to get into a 40 unit. The underwriting's a little bit different in that your models are larger, right? Because you're dealing with 40 units instead of 2. And for us, we joined a group of sponsors that had done this already, right? We didn't go this alone. And the reality is we're not doing this. I don't have the knowledge of the syndication fully yet, but as we were bringing investors to the table and looking for sponsors, one of the things that we were very clear about was we're not going to get into a deal that we cannot actively participate in. And as we peel back those layers, you learn who's who. And it's not to knock someone that doesn't want to give me a seat at the table. I'm nobody. But the reality is we're building something for the future, right? We will be the lead sponsors on these syndications coming up. But now we're part of an asset management team. There's a great finance team, marketing team. So I have some marketing in my background. So we're spinning off a YouTube channel for the investors. And we're all about user experience, right? What is it that the investor needs to see? So first was shaking off the fear. Second was we were putting ourselves in rooms with people that do this, right? I wasn't sitting in an echo chamber screaming at my partner, him screaming back, let's do syndications. The big thing that changed for us was we had a group of investors. So we had, but the deals, as interest rates were going nuts, it was really affecting the cost to borrow money. And also where we want to invest, taxes were just a little rough. And when you start studying the syndication model and the economies of scale that you gain in 2 units to 40 to 135 was the last one we were underwriting. You can't shake a stick at it. And it was less money for us, right? But again, we didn't get into this for the money. We said, what is beneficial for the investor? And the syndications are better for the investors. So if you're looking into passive investments, man, it's really hard to beat a deal where you put money into people that have done this before and just you sit back and you get mailbox money as a passive investor. But if it's something that you want to pursue actively, there are many syndicators that are doing good things. You just have to shop for them. So there was a point where my partner was shopping deals and I was shopping sponsors because we had money. And it was a good place to be. I was getting a lot of calls, a lot of emails. Like, do you want to come work with us? We'll take you on, this and that. But again, we have very specific needs for first-gen investors. We had our first investor call on this deal last week, and everyone that could joined. And there's just a different profile for someone that doesn't have a bajillion dollars sitting in the bank. They want to know where their 50, 75, $100,000 is. What are the finishes on the apartments? What is the profile of the person that's going to rent there? And they want to be more involved. And that's not for everyone. Tim, we're in a world where a lot of people don't have the time for that. But for us, it's important to hold people's hands in the fear. They continue to be fearful. And they're taking a huge step in trusting us, in trusting sponsors, in trusting the market to do what it's going to do. But if we want to see a change, and if we want to help people move into that next level and help them build that generational wealth, it's the time that we've committed to. Again, this comes from that 3-hour conversation many months ago now. And we just sat there and said, okay, we're going to do this. Again, we're thankful. We have good work, good salaries. I don't need an extra $10,000 a month to go to Europe. I'm not going to do it. My wife has some health issues, and that's not we love what we're doing. It's becoming a huge passion just to help people understand that and move forward.
Yeah, you're right. And I think part of that education to the passive investors too, especially new passive investors, is I don't know, they probably make an assumption that we're making a ton of money off of each deal. Like, why else would we be doing it? And
No.
maybe we do make decent money over the course of the deal, 5 years from now, 7 years from now, whatever the case may be. But it's a lot smaller than most people think up front when it comes to putting the work that we're doing to put that deal together, vet sponsors, vet the deal itself, etc. Whereas, yeah, I would much rather be on that passive investor side in some instances, especially when I'm in the thick of it. And hopefully one day I will be there, sitting on the beach, sipping a Mai Tai, whatever. But for right now, I'm willing to put that work in, again, for that longer term goal. I think one thing that I tell to people, like, this is not a get rich quick scheme. It's a get rich eventually plan. You know what I mean?
Yeah. And it's great that you put it like that. Now, there are certainly ways to move the money faster if you're willing to put in the work. And that's where you see the people that are flipping homes, wholesalers, they're out there. It's hard work. It's not glamorous by any stretch. But again, most people, at least the profile of the person that we're dealing with, they don't want to do that. They like their jobs. They're moderately successful. Someone sitting with $50,000 or $100,000 in the bank, they're typically, I would say that they're well above the poverty line, right? They're moderately successful at what they're doing. Others have trades that they worked really hard to do, CPAs or managers in companies, tradesmen. That's what they do. And their reality is different from these people on jet setters. And most people are not going to live like that. You got a family, you got some kids, you're not going to go to clubs and, and popping bottles of champagne. That's not true. And as you talk to people, all they want to do is make sure that what they're working for is working for them. And in what we do, there's very little money up front. Like you're putting in a lot of time for free. You're hoping that you compensate at the back end. We did not get into it for us to make money. We got into it to help people. And where it stands, our goal was a duplex, and we blew that away 40 times. And from 0 assets to 8.5 million assets under management. It's because the message is resonating with people, and we're happy to do it. One of our goals in the next year is to translate everything into Spanish, right? We live in Miami. There's a large Hispanic population here, a lot of immigrants. And so these people, they're coming from places where their money is getting stolen. And so they'd rather put it to work here. And we're happy to help walk them in there. And we're just looking for ways to help. That's always find a problem and find the solution for it. We haven't had to find the solutions out there. It's just trying to help people like connect the dots, right? There's a problem, you have money that you need to put somewhere, and there's a solution, and it's a multifamily.
Yeah, and that's awesome. All right, hey, this has been some amazing conversation, but we do need to move on to the turbo round. So I'm going to ask you 3 questions that I ask all my guests, and I'm going to ask in quick succession. The only thing that I ask for is an honest, quick answer. So here you go. First question: what is one red flag every investor should look out for? And that can be either a passive or an active investor.
I think it's lack of communication. Right? Whoever you're dealing with, whether it's your real estate agent, your insurance agent, a property manager, the investment manager, lack of communication shows a lack of care, a lack of professionalism. And I think that to me is a huge red flag. A lack of communication. Tell me that you can't talk to me before you ghost me.
Yeah, exactly. And it's one of those things where different investors will require different levels of communication. Some will require very frequent communication, whereas others, hey, as long as they get that email once a month telling them what's going on, they are perfectly happy and you will never hear from them. But I think the onus is on that operator to assume that they need a lot of communication, and that's what we have to give to them. So I think you're absolutely right. I start to worry about transparency if I'm not getting the communication side.
Correct. Yeah, agreed.
All right, second question. What is a myth about this business you would like to set straight?
I would say that a myth about this business is that it takes a lot less work than you think and a lot more work than other people tell you. Getting started, it was a lot of work, right? But then when I go and I see other people doing it, social media is just kind of your highlight reel, right? And they would make it seem like it is not that much work. So it's more work than you think, but it's less work than they make you believe.
Okay, I know what you mean. So what does success look like to you?
Success to me, know that this podcast is focused on your journey to multifamily millions. To me, it has very little to do with money. I've been able to gain a lot of perspective in my life, in what I do and who I'm around. And it has to do with the people around. I wrote an article, it's not on the website yet, but it's the question of what is your why? And I break it down. And the question eventually morphs into who is your why? It's about the people around me. It's my family. How much can I give to them? The people in this group, right? In the first gen investors, how much can I give to them? There's something to be said to have the people around you that you are willing to do things for. And not everybody has that. There's not people that they have the blessing of being able to sacrifice for. It's just a bunch of strangers. And so the more that I have people around me that I can give to, I think that's success. If I can serve my wife, if I can serve my parents, my siblings, and then in a more general, broader sense, the first gen investor community, I think that's success. I tend to be a hermit, and I used to be a video editor, and I was 30 hours in a booth somewhere and I was happy. But as I started moving into management, I realized that I have the ability to affect people. And the more I can do that, that's success.
Yeah, so it sounds like it's one, serving those around you, but even more than that, raising them up.
Yeah.
Making a better situation than they've had now. And I think that's exactly what you're doing through your education and also through the investments. One, it improves their perspective and gives them the options, the awareness, whether they invest with you or not. And then
Correct.
if they do invest with you, then they're creating more financial security, which is obviously a plus and something that this nation needs, because I think financial literacy is something that's woefully lacking, unfortunately, for a whole variety of reasons. So anything that we can do to improve that situation, I think, is definitely value add. So thank you for what you're doing.
No, thank you. And thanks for having me on. I know that we're coming to the end, but it was funny. I was meeting with someone in Las Vegas, actually, and they were asking, like, what do you charge for your articles and for the education? I said, nothing. And he was dumbfounded by that. A lot of times it's just asking the question, right? Tim, you're someone that's very giving of your time and your energy to the pursuit of education, right? This podcast, it takes a lot. I don't have one, and I've been delaying it because I know the commitment. I work in production, and I'm very I'm blown away by your commitment to it. And you're not charging someone to listen to it. And as you put that out there, many people and most people are willing to do it for free, right? Because you have your mission and your core values in what you do as on investments. And you want to get that message out. And so the more you do it, the more people see it. And they're shocked. They're shocked that, oh, Tim, I'm sure Tim is not perfect. Brian's not perfect. But the idea that you'd be willing to put that out there for free, I think that's still, people are not sure about that. And it takes more people out there doing it for them to know, yes, there are truly people out there that care about your success. And I think it's great to be a part of that.
Yeah, absolutely. The only thing that I do ask of people is that if it provides any value, then please subscribe, leave a review. And why do I ask that? Not because I want to be podcast famous, because it'll get that podcast out to more people. Right?
Yep.
It'll get that education out to that many more people who otherwise wouldn't see it because it only had 5 reviews or 20 reviews, whatever the case might be. So I definitely appreciate that. All right, Bryan. Hey, this has been amazing, but we are coming to the end here. So please tell our guests how they can get a hold of you and if you have anything else that you'd like to share.
We're on www.firstgenfoundations.com. That's our website. That's basically where they can see who we are and just understand a little bit about what we're doing. Our investment thesis is there. Our articles are there, just all around. And then we're active on Instagram at First Gen Foundations, at TikTok. I'll start putting up more reels and videos and whatnot. I'm working on that second part of it. And just to encourage you, take that next first step, or if you prefer, the first next step. The idea is if you're spending the amount of time that it takes to sit through these podcasts and to read books, like you're getting the theory, but just find someone who's 6 months ahead of you and 6 months behind you, and learn from that person that's in front of you and teach the person behind you to take that next first step. The fear will always be there because you're trying to be responsible with what you have. And being a good steward is something that's important in life, but don't let it paralyze you. Again, I'm a very risk averse person, but I've been learning to just take that first step. And sometimes it's more of a shuffle. It's not even a full step, but as long as you're moving forward, you'll do well. And your generations after you will appreciate it. And that's what we're trying to do at First Gen Foundations. It's trying to help build that first gen foundation for first gen investors.
Yeah, I couldn't agree more. Thanks again, Bryan. We'll definitely have all your information in the show notes. I appreciate you coming on, and I look forward to seeing you do big things on your journey to multifamily millions.
Thanks, Tim.